Trump shines in Davos, and markets make, once again, new record highs. What's up, everybody? What's up? Welcome aboard. It's Bubba's Bottom Line, and as we said in the opening, Trump shined in Davos, and I think was really a pretty big hit when you look at it. I saw parts of the meeting with a lot of the major corporations, and they all seem to be extremely happy. And of course, the tax cuts seem to be working out. And you know, if you want to listen to the left and hear that the tax cuts are only for the rich, and yes, they are for the rich, except that they are now trickling down the money to their employees, which I think is something that we have not seen in at least 10 years, where the money actually flows down back into the hands of employees. And of course, you've seen it in many, many companies so far, and I think you'll see it a lot more. Yes, it's a tax advantage for the rich, but of course, the rich are the ones who pay the bills, and that's really, I think, something that we should look at and not get confused by what we hear from the other side of the aisle telling us that this is, you know, punishing the middle class because they did get some money. Now, again, I'm not totally thrilled with the tax plan. I thought it could have been better, but I think this is an okay start. And if we're going to see some continuation, and you're going to continue to see money pass through back to some of the middle class through these raises and things, I think it'd be fine. Again, I would like to have seen a better deal for small corporations over large corporations. But again, I'll have to live with what we've got. But I do see that it's potentially working the way it's supposed to. And of course, markets have made new record highs once again. You know, again, it's amazing. It's fascinating that we continue to see this money pour into the equity markets. I think, again, one of these things I like to talk about is right now, I think you're seeing retail investors that are buying. I think the commercials are pretty much out and holding their positions, but now starting to short against them. But you have a bunch of retail customers that are buying stocks with money they don't have to buy stocks they can't afford. And of course, this is always the sign that the markets are approaching a top. Now, again, we're not predicting the top today. We're not telling you that the markets are going down today or tomorrow. What we're saying is that these are significant signs that show indications that a market is reaching a top. And we just look back at last week. We had a major update on Monday, followed by updates Tuesday, Wednesday, Thursday, but we had a lot of volatility. Not only are we starting to see price volatility, but we're seeing some implied volatility grow, or the VIX get higher. Now, the bookend days of Monday and Friday were, again, pretty pathetic from a trader standpoint because they basically just went straight up. But Tuesday, Wednesday, and Thursday, you had markets that were way up, went way down, and then closed somewhere near the flat line, most of the time just slightly a little bit higher. But I think you now are starting to see the first few chinks in the armor. The transports have now gone down a couple of weeks in a row after those spiking to highs. And of course, again, we are not trying to convince you that the markets are at top. We're not trying to convince you that the rally is over. It certainly could last a lot longer than we think it can. But I do see a lot of warning signs, and certainly the ability to trade actively are a lot of things that we can look at. Now, you know, there's been questions around the Trump revolution. Is it over? And, you know, I would have to say, no matter what side of the aisle you sit on, that Trump has done a pretty good job at doing what he can do based on the material he has to deal with, which is a bunch of crap. All right, you know, the swamp does not like the bringing in of Donald Trump because he is shaking the trees a little bit and trying to drain the swamp. Look, you have a few things that are interesting, and I think the biggest and most interesting is the continued resolutions to push the debt ceiling back, or the budget back, now we've got another 3 weeks forward. Last week we talked, we were in a shutdown. Now we're 3 weeks again. Now, to me, that says that Trump is saying, I'm not giving in, and you're not going to sneak in some crappy bill in this whole process, okay? And we're going to get this either settled correctly or we're going to shut it down again. And that is one of the things that, as we've talked about for years, either on the Bubba show or on some of the other things that we've done, is that they always end up settling. And it's usually because the other side, depending on who's in power, other side brings in some stupid bill that costs a lot of money that they can pass it. There's no other way they could pass it. So they run that through on the debt ceiling or the budget. I think this is why we've had now, I think, our fourth or fifth continuing resolution here. Now, what effect does it have on the stock market? I would say relatively none. All right, why? Well, because you've watched the markets continue to go higher. Right now, nothing bothers the markets. It doesn't matter. Housing sales fell. Interest rates are rising at a crazy clip all of a sudden, in which the Fed will lose control, as always. So what are we going to see here? Well, I think that, one of the big problems I think you should consider is debt. Now, last week I got to talk on Stuart Varney's show on Fox Business, and I go, why doesn't anybody ever talk about debt? Do you realize that about 35% of all used cars being traded in today are underwater, which means that the person who's trading it in owes more on that car than it's worth, which means that all they're doing is financing more debt and they're acting like the federal government. They're financing more debt and pushing it down the road. Now, here we say that doesn't matter, but eventually debt has to matter. And this is another issue, especially when the average American home does not have $500 to $1,000 in case of an emergency. Now, we all know that stuff happens and emergencies happen. And how are you going to pay for it? Well, unfortunately, most are going to have to pay for it on a credit card. And what happens with that credit card is they continue to build that debt. And if you understand the relationship between the credit card and the lenders that go to the public, they're really not concerned if you pay it back. What they're concerned about is if you make that minimum payment. All right, it's a way that the cockeyed way they look at their balance sheets. But if you've seen all these commercials of people that are fighting these credit cards companies to beat down debt for individuals, this is one of the things that we have. Again, it's the way that they show income based on the debt that's being paid back, and the usury rates that you pay on a credit card are ridiculous. So now you've got this situation rearing its ugly head in autos. And how many homes do you think that are underwater, that are negatively amortizing? We have these things happen all the time, but again, nobody wants to talk about debt. Now, the debt model only gets worse as interest rates start to rise, because a lot of these variable rate loans that have been put out for years are now going to come back to roost, and you're going to create a big, big problem. And one of the big problems we see is many of the pension funds throughout the country, especially, for example, in Illinois. Illinois just had to fund $107 billion of debt, okay, to help fund their pensions. Now, again, if you think Illinois is the only one, you're wrong. They're all in trouble, including even private pensions like GE, because what happens is people try to grab off to that money and use it knowing that they're going to be able to pay it back, not realizing that something could go wrong. And you can find that most pensions are well underfunded, which is really just another word of saying there's a lot of debt out there, because those pensions are going to have to be honored at some point, or you're going to have some major problems. I think that you have to watch the overall program, and of course, we continue to see the dollar get slaughtered. And why is the dollar getting slaughtered? Well, you could say that it's just because it's weak right now, but why should it be weak? You can say it's because Mnuchin and Trump would like to see a lower dollar. Of course, Trump said the other day he'd like to see a stronger dollar, but We all know that that's not necessarily the case. They like the weaker dollars. Why? Well, first of all, it creates more for others, okay? And if you're well among the wealthy, then weaker dollars, stronger dollars, it doesn't really matter to you. But at the end of the day, the real facts are that the dollar is weaker here because interest rates are starting to rise. In spite of what the Fed wants to do in their own way of ignorance, the interest rates market is pushing markets higher. Bond futures continue to get crushed, pushing up the 10 years at almost 2.7, the 30s almost at 3% again. Now, these are 3-year highs in interest rates right now. So the only way that the Federal Reserve can control the interest rate market right now is through the dollar. And by keeping pressure on the dollar, it keeps, even though rates are higher, because of the weak dollar, it exhibits a low interest rate market. And that is something, again, that's what always the concern is. So what you're going to see, and we'll get more of this in the commentary, but eventually you're going to see the dollar will pick up strength, interest rates will be going up, and that's what will create the bigger problems when it comes down to it. And I think this is something that we should continue to watch. You know, you've seen and watched oil continue to push higher. You know, first of all, based on the crookedness and the manipulation and the crap from OPEC. Then you've seen it also now push higher because of the weaker dollar, making our oil more attractive because, again, if you've got a euro currency, that's worth $1.25 versus $1. So now you're getting a 25% discount on all of your purchases. And that's the old export, you know, increased GDP. But somehow we managed to miss the 3% GDP number. Of course, again, you know that I don't believe that they're going to get there. I believe it's a bunch of hooey right now because, again, we don't have the true growth that I think we're looking for, nor that I think we want to see right now. And I think this is one of the issues that comes to shine. And this is where, again, I hope that President Trump will step in and then resolve these issues because these are very, very big issues when you look at the overall picture and the advent of real, true free markets. In the meantime, this is Bubba's Bottom Line, and I am Todd Bubba Horwitz. I'm going to step out here for a break, and I'll be back with more of Bubba's Bottom Line. Todd Bubba Horwitz. Well, everybody, you know that I have a high school investing program. It's highschoolinvesting.com. And you know that I'm trying to now continue to build this. And after 7 years of financing it myself, I do need some help from you, my friends. And I already want to thank those who have stepped in, and Rhonda, Melanie, Werner, John, my friend Jeff, Trader Jeff out in California, and many of you others that have stepped in, John, Wisconsin John, and you know, many of you have stepped in and helped, and I obviously would like to have more of you step in and help. And my offer to you is if you come in and help me by making a donation through Patreon, patreon.com/Bubba Trading, I will give you 1 free week of my advisory futures program to see if you like it. Okay, and no charge, no credit card. You can just try it out. All I do is just email me and say, hey, I'd like to check it out. Okay, and by making a donation at patreon.com/Bubba Trading, you get to check that out. Don't forget to listen to the Bubba Show every single day at 4 to 5 Eastern Time at libertytalk.fm. That's our internet radio station that we've been running now. We've got programming 24 hours a day, so make sure you check that out. And in the meantime, we're going to head back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, you know, we've been solving all the problems of the world, and we know that the markets are wacky tobacco. But we also do believe that the markets are now existing signals that the tops of the markets are in. Now, again, we're not predicting the top today, but there are a lot of signs. The more active price volatility with the more active implied volatility, and who are the buyers, and the buyers are the retail. But I think we have all other big stories to look at as well, and that is, of course, the cryptocurrency world. We've got more people trying to get into it, which is an interesting sign from a market standpoint, you know, because now it's becoming more accepted. So all that BS from Jamie Dimon and all those other jackasses that said that, hey, it's a bubble, it's no good, it's criminal, they're all of a sudden getting involved. So I guess something must have happened, like maybe they got in and made some money now. So, but you've got a lot of things happening, and there's many still looking for the cryptomania crash. And again, I have no doubt, and I'm not concerned that there may be a big sell-off. But as I look at the overall patterns, we may have seen the overall big sell-offs already. Obviously, the most popular one is the Bitcoin, which went from over 20,000 to just under 10. That might have been the crashing of the bubble. One of the things you have to remember about the cryptocurrency space is that it is a true free market. It trades 24 hours a day. You are not dependent on the broker, okay? You're looking at a bid offer trade that is truly designed to have you be able to trade and discover price discovery at the time you trade it. So that is totally uninterfered with. So I think you're seeing a truer free market in the cryptocurrencies, much freer than the markets that we trade every day that are sponsored or that are backed. Again, are there issues? Sure. Could it collapse further? Sure. But I think what I'm trying to say here is that cryptocurrencies are here to stay. Which one's going to be there? I have no idea. There's a billion of them. I mean, they come out every day. But there's going to be acceptance of this space. You can already see it by one of the brokerage firms, Robinhood, which is the firm that works on no commissions on limit orders, is now getting into this as from the brokerage side with no fees. So all of a sudden now there's becoming competition into this space for some of these cryptocurrencies. So, don't kid yourself. Microsoft is involved in cryptocurrencies. Overstock.com, Patrick Byrne was the first who was really involved, but Microsoft is a big boom to the business because they're a technology age and they really get it. They understand it and they've got their own. So I think one of the things that you're missing if you're saying just walking away is that this is real, it's going to be here, and we're going to see some more action. Now, I'm not telling anybody to put all their money into Bitcoin or into the crypto space. I'm saying that use this with a couple of percentage points of what you invest and go ahead and put a little money in here, knowing that it's a high risk, but it has a chance to have a huge reward. All right, now there's money out there, and of course, one of the problems you have in this game and in this business and in this world is you have those who truly tell you the facts, as I do, and you have those that are trying to grind out an edge, trying to get you to invest in something that you want. Whenever you see these fear mongers talking about the market's collapsing, going to zero, blah, 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 gold going to $1 billion, and now somebody coming out saying Bitcoin going to 100,000, the reason they come out with these types of ridiculous statements are they are trying to sell you something. So I always urge you and warn you not to get too in love with some of the things that you see or you hear, because again, most of it is designed to sell you something new. Now, if you've been watching this, I don't sell you anything. I ask for one little donation, but I'm not asking to sell you anything. I'm not trying to create anything for you. I want you to learn how to deal with the markets better, okay? So I urge you to be very careful when you start reading these wild, crazy stories, and then somebody writes about the wild, crazy story. It's all designed to put money into their pockets, all right? It's something that, again, I find concerning. But I find nothing more concerning that the savings rate for Americans continues to fall. I think that, we as Americans do not save anywhere near enough money. And really that then goes back to we're not investing enough money at the right time. Yes, right now we've got a major push with a lot of investing going on, but more what I would call what's going on now is more gambling. I would say that you have a lot of people gambling because of the cheap money, because of what's going on. You've got the gamble going on into the markets because A, that's the only place to really go, and B, everybody thinks that it's easy money, and C, it's the path of least resistance because it's just easy. Just borrow from your broker, take that margin money and go. That's going to be a problem. Okay, again, these are things that we don't talk about. These are things that are hidden in the back room. It's like the old, the films from the 8mm films with the black socks and the sunglasses on, right? We're hiding from it, and I don't think that it's something that should be hidden from. I think it's something that needs to be addressed head on. It's just like we are now seeing oil. Oil is exploding, and of course rig counts are exploding to the upside, which means that oil prices should start to fall. Oil is under a dramatic amount of fear right now, which is why we continue to see these high prices stay here. If you go a year from now, oil is $10 lower. Again, this is the same we saw in 2014. I warn you to get too excited about this. I think what you really want to watch is if you watch the farming space and the commodity prices, like soybeans, like corn, like wheat. Now, they all had a good week last week, but they're still nowhere near where they should be in value based on the dollar, based on what's going on. These are so truly undervalued asset classes. A, that makes it a good buy if you're willing to step in, but B, it tells you that there's issues in the overall economy. Cattle markets as well. Now, again, one of the things I always like to talk about is we have the reports that come out. You know, I'm a big anti-report guy. I don't believe in most of them. I think they're already priced in. I think a lot of the inside folks get the inside information ahead of time, and they're already priced sitting into the market. So I think that's a bunch of BS. But I tell you what, nothing pisses me off more than having a report come out after the market closes on a Friday when nobody has a chance to defend against it. Now, to me, this is the dumbest, most ignorant thing I could ever imagine. And that is, of course, I'm referring to the cattle on feed report, which came out Friday after the close, so that every farmer and producer that's involved in cattle in that market can fester all weekend if they get a bad report. Now, the report was relatively neutral, which I could have predicted based on the price action going on. But my real question is, why would the USDA put out a report that not one person can react to that day, the next day, or the day after, and not open it into a liquid market and open that first thing in the morning? They got the numbers. It's not like they had to wait for the last second count. To me, it's just dumb, okay? But of course, that goes along with what my commentary will be about later today. But it has no logical sense. This is one of the beauties of the cryptocurrency space. You know, I can turn my computer on right now and go trade in any of these cryptocurrencies because they trade 24 hours a day, 7 days a week. The markets that we see regularly do not trade 24 hours a day, 7 days a week. Some trade more than others, but you really end up with a much bigger mess. So now as we look going ahead, okay, the markets are on pace to go up a gazillion. NASDAQ is flying. The Russell's still the weakest. The Dow, the S&P, we continue to see these new record highs show up. And I just wonder, okay, when does it stop and what stops it? Well, I think it stops sooner than later, okay? I think that you want to watch, and this is one of the things I've talked about many, many times for months now, is what we really want to see is the plunge down, and let's say 2-3%, all right? Because since we haven't seen a 3% sell-off in over 2 years, a 3%, 4% down move, followed by a rally, and if the rally fails, that would be where we could say, hey, the top is most likely in here. Right now, there is no reason to try to fade or get in front of this market, but you're starting to see a couple of things that are a little different. Now that companies are beating earnings, they're not getting that same gyration push up on the news. Okay, you're seeing, even with good earnings, you're seeing companies start to get hammered a little bit, other than Netflix, which is going to Pluto. But again, we've talked about Netflix. We know that it's kind of in the takeover mode. There is a lot of chatter and a lot of talk about that. But overall, you're starting to see reasons why the markets do not want to continue to respond to this overall keep pushing up. We're starting to see some weakness, volatility, price swings. There's a lot of things going on that could signify the tops of the markets are in. But we're going to step out here for a break. This is Bubba's Bottom Line, and I am Todd Bubba Horwitz. And of course, I do want to remind you about highschoolinvesting.com. Okay, again, I'm looking for some help through patreon.com/Bubba Trading. We are in just over 300 high schools and are trying to get into all of them, which would be, 50,000. But I do need a little bit of help because I have financed it myself for the last 7 years. And again, to help entice you, I'm willing to give you one free week of my futures advisory if you check it out. and you can be like guys like Ron and Rhonda and Keith and Melanie and Marissa and Ruth, and help us out and help us grow. That would be great. In the meantime, don't forget to get the Bubba Show every single day at libertytalk.fm, 4 to 5 Eastern Time live, and you can also download the podcast from there. In the meantime, let's head back to the show for my commentary. And welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course, every week I get to put my commentary out, and this week is an extremely big week in the markets. You've got the Fed meeting on Tuesday and Wednesday. You've got the jobs number on Friday. You've got a market that has been just going Looney Tunes. But my talk is easy. The easy prey is the Federal Reserve. The imbeciles from the Fed that have no idea what's going on around them and have no idea how to fix the problem. And not only that, we are now seeing them lose control of the interest rate market, and they are now being forced to try to step on dollars. And unfortunately, in my opinion, the central banks around the world are all colluding together to help. And I think you're seeing this push down of the dollar to lows we haven't seen in forever. If the economy is as good as we say it is, then the dollar should be rising. Of course, when you allow one party to manipulate price and force price, which is what the Fed does, because that's their whole game, is to manipulate the economy into what they're saying is for the better good, which is a crock, okay? Because what they're doing is for the better good of more damage, which will then create another collapse, which will then create another opportunity for the uber rich to become uber richer. Okay, why is that? Because they will be able to suck up all these assets that are going to get hammered once again. And don't kid yourself, if you think that the Fed is doing a good job from a realistic standpoint, I know many of you have made a lot of money, including me, because of what the Fed has done. Okay, your 401ks, your IRAs are all doing great because of what the Fed has done. But what's going to happen when once again they lose control? And their ability, their time of losing control is getting closer with every day. Every day you see the bond markets get hammered, okay, it means interest rates are going higher, and then they try to push the dollar down. All they're creating is a mess, which will create, first of all, the rates are going to have to raise too fast when it finally happens, because, again, not only will they raise a quarter point, but if the dollar starts to rally, that's like another raise. Keeping the dollar lower is like keeping the rates down. Okay, but we'll get into that hyperinflation situation once again, because the models that the Fed works with are broken. And not only the models they work with are broken, but the people that administer those models are broken. That's why you have a dollar that's falling out of bed that is brutal. That's why you have a system that is showing, as Chish Regan calls it, the hourglass economy, where there's a lot up here, in the middle class there's nothing, and then it widens out to the poor again. These are all due to this Fed-driven, bogus rally that, again, I'm not telling you it's going to end, and I'm certainly not upset about it, but I think that this is what's telling you that they have no idea what they're doing. This is when you take away people's ability to trade a free market that has true free markets with real price discovery, instead of the BS that we get, which is not true free market and true price discovery. This is the problem. Now, I do believe that that President Trump is working to solve some of these. Now, again, I know he likes to cheat money. He may say different, but because of his background, real estate developing, they like cheap money. It creates higher prices and more buyers when you're doing real estate. But at the end of the day, I believe that he will clean out a lot of this, and we will have an ability or a chance to go back to a true free market system where you and I can meet, change price because of reality, not because of some fantasy land that has been built by the Federal Reserve. Okay, so let's see how they report this week. I'm sure it'll be a doozy once again. Who knows? I don't, I'm sure they'll do something that'll be awfully clueless, which is their way. But in the meantime, as always, I thank you for being a part of Bubba's Bottom Line. I appreciate all you do. I appreciate having you watch. In the meantime, we'll see you back here. Well, we'll see you tomorrow for Bubba's Daily Update. But for Bubba's Bottom Line, we'll see you back here next week. Have a great weekend, everybody. Thank you so much for being here. This is Bubba's Bottom Line. Todd Bubba Horwitz. We'll see you later, everybody. Thanks.